Hello and welcome to today's NinjaTrader ecosystem event, How to Trade Trend and Momentum. My name is Chris and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader brokerage using the phone number or email on screen. Lastly, if you are new to NinjaTrader, please make sure to sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen and then clicking Get Started under the Welcome section. Before I turn the mic over to Dave, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient financial security or lifestyle should consider trading. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Thanks again for joining us today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Dave.
Feedback. Appreciate that. Appreciate you guys being here, and thank you again for being here.
See the screen yet, Jay.
Oh, let me make sure you can see my screen. Let's pick the best one to show you, I believe. There we go. There we go. That's just showing the screen up there. So again, I'm Dave Gear. Hey, thanks for being here, everybody. And we've got the chat up, so hopefully we can see if we see any of your questions. We got folks here to answer those. Again, we appreciate you guys here being here and taking time to learn about BuySide Global and some amazing products we have for you. My name's Dave Gear, lead trader here at BuySide. I promise you'll find today's training informative. We have a special offer in the middle and at the end of this, so stick around. In fact, you're going to hear me say a couple of times to please take out your phone and take a picture of this or write this information down. So just get ready for that. But yeah, just pigtailing on the back of what has already been said about risk. Please understand that it's important for us to do a legal disclaimer. Not only is it legal important, but also we feel like it's a moral imperative to just let you know, if trading is risky, please understand this is for educational purposes only. It's not financial advice. We follow CFTC Rule 4.41. These are hypothetical performance results, no representation. It's being made that any account will or is likely to achieve profits or losses similar to those shown in this video. So please read that in the rule, CFTC Rule 4.441 for further details. So this is again, this is the first picture I'd want you to take a picture of. I want you to be able to see this, see our website here, buysideglobal.com, and our email, info@buysideglobal.com. We do have a phone number if you can respect that, business hours. I appreciate that. It'd be great. Give us a call if you have some questions for us. So we'd love to reach out to you and visit with you about anything trading wise, not specifically our products necessarily. So let's talk about who we are. BuySide Global. We're advanced order flow software for NinjaTrader. Okay, we provide AI-based alert indicators and trading strategies for the active day trader, so you can make smarter entry and exit decisions. All right, a little history. Started in 2014 by a former Wall Street trader, and we are proud vendors with NinjaTrader. We really respect NinjaTrader, both as a company and as a platform. I've traded with multiple platforms, and I love the NinjaTrader platform the best. Does everything I want it to do and more. So, and just so you know, we've done extensive research and development, back testing, revisions. I've gone into developing our BuySide Global software. So that's a little bit about us. Let's talk about what we're going to do today. So we're going to talk about number one, how to trade using trend. You've always heard trend is your friend. Let's talk about that. Momentum, order flow, big names, big words you've always heard if you've been in this game a little while. And then I want you to talk about how to use supply and demand zones to find the trend. Everyone talks about the trend. How do you know what a trend is, and how do you know information about the trend? You want to be able to find entries and exit levels. We want to talk about how to confirm the momentum using order flow. And then we have special offer for attendees here. There's gonna be one in the middle, and there's gonna be one at the end. So pay attention to that for us. Here's some stuff that, in my 10 years of day trading, I find that these trading strategies are really the most consistently effective method of trading. Okay. Now, we're not going to be able to cover all these strategies today. I just want to give you my personal experience and my recommendation. We're going to focus on number 2 today. So I'm going to say all 3 of them: chart pattern and price action, supply and demand, and order flow based trading strategies. But we're going to focus on to supply and demand, just one trading strategy. Okay. I want to teach you the foundations of trend and momentum based trading. Help you get started. If you haven't been trading using that, help you steer you towards that. I'm going to cover that in the best I can in the next 30 minutes. But I also want to give you something right off the bat that you can use to become a better trader with no cost involved. Just some of the words I say should help you be a better trader, period. But also, I wanted to give you something just from us to you. Okay. While we're going to focus on the supply and demand based trading strategy, I want to offer a great ebook with price action trading strategies and a 1-month license to a premium price action indicator. Okay. It sells for close for $500 on our website. Okay. Just as a special thank you for taking your time today, joining us here at the NinjaTrader webinar. We're offering this full bundle for free. Okay. It includes an ebook, 1-month free access for price action and chart patterns indicator. You don't have to do a credit card. You don't have to sign up for anything. And it's only available for the first 50 folks today. Okay, now I know we run that risk of everybody's going to jump off of this and go out and go out and get that. But you can probably do that while we're doing this, or maybe right after. Just want you to pay attention to us, and we'll get through this together. So I just wanted to offer that to you, so you can just, again, we want you to help your trading journey, no matter what our role would be with that. So, okay, so let's get into some basics. I'm going to teach you some stuff. Maybe you don't know this stuff. Maybe you've seen it before, but everyone needs to have this big 30,000 foot view of the market. Okay, and what you want to do is look at the market through the supply and demand lens. Okay, the market only has 4 things it does, and it doesn't necessarily do it in this order. The orders we're talking about, it could be anything, or this chart here, maybe not. But the market either trends up, trends down, gets choppy, and what we do is we call that the accumulation or distribution. And then it just switches places. So again, this is accumulation right here, and this is what we call chop. Now we'll talk about more about chop, but we'll get to that. But just think of this as an accumulation or demand zone. We'll talk about why that is, and then the market will typically move up or down, and then you have a supply area where, again, this is a distribution or supply. Then the market could either move down or up. Okay, moves down, then that's considered a trend moving down. Then you'll have a reaccumulation area or a demand zone, and then the market will typically move up or back down. All right, that's it. That's the big thing. That's all the market can do, is you can have accumulation, distribution, or trending up or down. That's it. That's all the market does. Okay, so it just keeps switching these places. So what's the demand zone? Let's get into that a little bit. A demand zone is an area with a large number of traders who are willing to enter long. Okay, I think everybody knows that. But they also traders that want to exit. So think about it this way. So let's say you're down here and you're convinced the market's going to move up. In order to profit from that, you got to pull the buy button. Okay, so you got to enter long in here. So there's those traders that want to enter long, but also you got to realize you have short sellers, folks who got short in this area and are now going to take their profit because they're convinced it's going to go up or not move down any farther. How do they get out of those trades? They also have to push the buy button. All right, then the market moves up and goes back down again. Here's another accumulation zone or demand zone, moves up. This is what it does all day. Okay, so and realize that there's different traders call it differently. There's demand zone, you can call it support zone, accumulation. It all means the same thing. It's just an area with a lot of traders willing to enter long or exit their short. But it doesn't matter why they're getting in. What matters is that they're pushing the button to buy, whether they're getting out of a short or they just want to get in a trade. So what you have to do is understand what the market's led by, the institutional traders. All right. So the institutional traders use institutional information, basically huge advanced algorithms. They calculate the acceptable price that's acceptable to enter into the trade. Okay, they're willing to keep buying at that level until all the required contracts are accumulated. So you get to work, if you work for a great big huge institution that you trade with, you don't trade with 1 or 2 or 10 or 20 contracts. You're trading with 20,000 contracts. And if you pull the trigger on all those right there, it's going to zoom the market up and jack the market up for the rest of for at least an hour. So what they're going to do is they're going to just trickle their orders in. They have a certain number of orders they got to get at around this price, at around this price, around this price. They're going to trickle those in. Okay. So demand zone is called the accumulation zone because institutions will hold that level until their accumulation is complete. All right. The demand zone is where you're going to have higher buying interest. That makes the prices go up. All right. So we're talking about accumulation or demand zone, and obviously the opposite is true with supply zones. Again, you've got folks willing to enter short, all right, they've convinced the market's going to go down, or you have folks that have pulled the long button already, they're in long and they want to take advantage of that. The only way to get out of a long is to sell. Okay, so everyone who's going to get in the market in here in this area is going to sell. It's just the reverse of the demand zone. Supply zone, resistance zone, you can call it the distribution zone. It's all meaning the exact same thing. Okay, an area with a large number of traders willing to enter short. Okay, again, institutions use these advanced algorithms. They're going to calculate the price to exit those trades or get in short. They're ready to sell at that level once it's offered, once it's hit, until the required contracts are all distributed, which is why we call it distribution zone. So that's, they're willing to sell those off until all those are complete. All right. So please also understand the supply and demand can swap places. All right. You can have support and the market comes up through here and hits resistance, comes down and hits support again, hits resistance, hits support again. And this is resistance until it's not, until it's broken through. Okay, and then oftentimes resistance becomes support. Again, this is just a 50,000, 30,000 foot view of the market. Just need to understand these basic principles to go to get into these, be able to see this market for what it is. It's just basically supply and demand, it's distribution, accumulation. So as we get into those, different traders, how do you deal with that as a trader? We're retail traders. We only have a handful of contracts. How are we going to get in there? Well, there's a couple different ways you can use liquidity levels. A lot of traders start out the morning, they get in and they just start drawing lines like, well, this seems like it's significant here. So I'll draw that line. And then this seems significant and this and this. There's a lot of guys, a lot of folks that just draw manually as the new support and demand levels formed. Okay. A lot of traders just do that, but we have a premium indicator, okay, that can indicate these zones for you guys. And we're going to get that in just a minute, but again, we're here to talk about the trend, to follow the trend. So we want to be able to, you want to check with these trends. So trend confirmation. All right. Obviously that's what we need to do. We got to have trend confirmation. We only want to trade when the trend is confirmed, right? You want to continuously monitor the supply and demand levels for trend continue, trend stop, trend reversal. Obviously, that's the key. If you can find the trend and the trend's your friend, then you can know if it's continued, if it's stopped at, it's reversed. And let me talk about the trend just for a second. You hear that phrase all the time, the trend's your friend. Well, which trend? Is it the last 2-second trend? Am I talking about the last 2 minutes trend, the last 20 minutes trend? The trend is kind of a function also of what is your perspective and what's your day trading strategy. So the nice thing is this day trading strategy that we're teaching you can be used in any kind of type of trading. So as long as you understand the trend, all right, so you gotta remember the market, even in a rally, is still going to have areas where it will back up, it not move, it jerks forward, it jerks back. It's not going to move in a straight line. You can get stopped out even if you select the right direction. Okay. So that's really important to understand that as well. So let me go through that real quick. How the market moves in a trend. You got to basically you've got, and you might have heard this before. You have an ABCD pattern, or you have to watch for these: the lows, highs, higher lows, and higher highs. And I can talk about this for an hour without. But if I can show you a chart, it'll happen really fast. Let me show you that with a diagram. This will make a little bit more sense. Okay, so this is an uptrend, and consider this. This is the market's at here. This price at one point, and then at some time later it's up here. Obviously, the trend was up. All right, you got me with that. But notice how it gets there. It never goes linear. It never just goes from here all the way up to here. You have this low, then you have this high. Okay, then it drops back down to this new low, but it's a higher low than this low. And then you come up to another high. This is a higher high than this low. This is an A, B, C, D pattern. And then again, it goes back down to low. Now, if you're getting into trades and you pull the trigger, you're confident about the trend, you pull the trigger, and the price never breaks above your price, you feel like the universe is against you. You feel like the market knows you just got in and it's not going to give you anything. This is what's happening. You might have picked the right direction, but there's the pullback you forgot to wait for. The pullback is the important part. You got to wait for this higher low, then pull the trigger, and then the market will give you your direction that you would go in. And if you're getting chopped out a lot, here's probably what's happening: is you're not waiting for this low. The market never moves linear. It's always going to get you on this. You can call this a sawtooth, a jigsaw, whatever you want to call this, but it's the slaughterhouse. If you're pick the right direction, but for some reason you keep getting stopped out, because here's what happens: you pick the right direction, you thought it was going to move up, you get stopped out, you figure, well, as it moves down this way, like I picked the wrong direction, so you go down here and you get short, and sure enough, the market turns around and gets opposite, and now you've been beat up. Okay, that's what could be happening. So this is the A, B, C, D pattern that you see all the time. All right, so that's an uptrend. That's an up rally. Let's talk about downtrend. Same thing. The market is at this price, and then eventually later it's down this price. Well, you could say, well, the market just dropped and just took that elevator down to the bottom. Gosh, I should have made some money. I bet a lot of people made money, but I didn't, because what happens is it drops down to this low and pulls back in a little bit of a lower high, drops down here to a lower low. It comes back up to a lower high. So you A, B, C, D again and saw this, but you pulled the trigger at the wrong time. So you have to realize that the trends are still going to have these pullbacks. Obviously, you've got to have these, be aware that you're going to have a lower low and then a lower high. And if you're going to go short, obviously you want to get in up here, not down here. Okay. So that wouldn't be great if the market had these little L's and H's on here. Wouldn't that be great? That's not how it happens. That's not how your chart gets. Everyone gets the same chart. You get the price, the volume, and the time, right? Well, so if you're trading down here, is this a rally I'm heading up? Well, yeah, obviously we can look back, hindsight, it was here. Market was up, it came up here. That's obviously a rising tide there. But if you gotten right here thinking, gosh, it's going to go all day, then look at this next candle pulled you back, and depends on your stop loss, could have got out of that. Or if you think I'm up here, gosh, I'm going to pull out a lot of money today. Nope, you're not. You're getting stopped out. Okay, so just understand that the market itself, the information you get from your broker, isn't going to give you the information you need. And let me show you an amazing indicator that you can use. Okay, you can't find the clarity in the naked chart. That's why I'm going to show you this, the BuySide Global Supply Demand Indicator. Look at the difference. Okay, this is one of our most popular indicators, the BG Supply Demand Indicator. Shows entries, supply, resistance levels. It shows you got demand zones are indicated by the green. And I'm not going to go into this too detailed, but I just want you to see the demand zones are the green zones. The supply zones are the red zones. All right. The zones are going to extend until the price is broken through. And that's the key right here. We'll talk more about that. Just want you to kind of see that, how the demand zones are the buy zones, and the seller zones are up here in the supply zones. That's where the sellers are at. All right. Now, you can see the trend patterns, looking at our indicator. And again, it doesn't print the A, B, and C, D on here, but you can see our A, B, and C. So again, here's your low. And the key is this green demand zone's formed, and it's not broken. It keeps printing throughout this whole time here. Then it moves up, you got a higher high right there. And now you got a supply zone is formed, but then it gets broken through. It changes color. So you see that that's changed in color. And then of course it's going to pull back down. Of course it's going to pull down a little bit. You get a higher low, it's above the previous low, and then you get a new demand zone formed, okay? To show the strength in the uptrend, okay? And so when you see these print and continuous, it lets you know, hey, that's an uptrend. These are green uptrends, the buyers are in control. When you see these getting broken, that means that the sellers are losing over and over again. And then you get another high of D up here. It's a higher high. That's confirmation. So when a price moves above A, B, C, and D, now you know which way the trend is. The trend's your friend now. Okay, so on a trending market, the demands are going to be created and extended without interruptions, like I'm saying. And then the supply zones, notice how they just keep getting broken. All right. The supply zones don't get extended. All right. The supply is getting killed. You can call it however you want. I like calling it getting killed or destroyed. And the demands are growing. That's a confirmation of a trend up. Okay. And then on uptrend, you should see more demand zones created. Again, these are continuous. They're not getting broken. They're printing all the way through to the current time. Okay. And the supply zones keep getting stopped. That's the key to seeing this. The trend and when to get in. So the supply zones get interrupted, these are getting stopped, and then demand zones keep printing with no interruption. You know who's winning. Okay, and that's the key to this indicator. All right, now downtrend, just the opposite happens. So notice that the supply continues, but up here the demand zones keep getting crushed. So again, you have an A, B, C, D. You have a pattern that you can use, that you've verified. Hey, we're in a downtrend. It's just so you just know it's opposite of uptrend. The demands are getting broken and killed, and the supplies are continuously printing out. Okay, so you get that A, B, C, D. You get this high, and then a lower low, then a lower high. This is lower low, and then down here a lower low. And this is a lower high. This high is lower than this high. So that is just an easy way to see that, a visual way to see that. Okay. Now, there's the simple rules and our suggestion to enter. Again, just because you confirm it's an uptrend doesn't mean you don't, oh gosh, I confirmed the uptrend, A, B, C, D, I saw it. Dave told me I'm going to pull the trigger. Don't enter just because you realize it's an uptrend or a downtrend. Please wait for the pullback. When we talk about that jigsaw, that saw blade look, you want to wait for that pullback. You want to wait for a new demand confirmation. So you've identified the trend. You continue to trade, but you want to enter on a pullback. Look for that lower. Okay, you want to pull back. It pulls back lower when the price pulls back. Don't enter on the rise. Probably gonna get stopped out. You want on the downtrend, same thing. You want to enter on the pullbacks that go higher. You don't want to enter on the drop. Okay, that's what everyone wants to do. You see that push, that surge, and like, oh, I'm going to jump in. Wait a second. Be a little more patient. Okay, every move's going to have a pullback, and if you miss it, you miss it. There's another trade setup right around the corner. Okay, so wait for that pullback. Now you've confirmed the trend. Now check out this. Now you want to find out how to find the end of the trend. Okay, using this indicator, it's pretty easy, because what happens is you get these supply and demand zones keep printing. Now notice up here, here's our demand zones, keep printing, and the supply zones were getting crushed, right? And then all of a sudden they're not. They're printing continuously. When you see these locking in, I just think of them as cattle locking in horns, bulls fighting, the horns are locking in. They're both winning. In other words, you're now in chop. Now, choppiness is relative. Again, though there's folks you could pull the trigger on some of these trades, and there's a way to do that. But I want you to understand that in general, when you see this trend keep going, now you know the trend is over. If you were in a long, obviously you're like, well, I'm seeing that. I know it's time to get out. Okay, so trends don't go forever. They all end. Every trend ends at some point. Market's gonna go back to being choppy, And where on an uptrend, the demand's extended, downtrend, the supply is extended. Choppy areas, you want to keep, they both keep getting extended. You want to notice, like I said, I pointed this out already, the tops and bottoms keep getting extended. The middle zones, you want to kind of ignore these. This is kind of chop. You'll get these that print out because there is buyers and sellers here, but they're going to get chopped as well. So you can ignore those. As long as they keep getting extended, you're in a choppy zone. And if you're in a long, again, you want to get out of that trade. A couple different other ways to determine if that trend is over. You get the end of the higher highs and lower lows. Okay, that's one way to determine. You can see double tops or double bottoms. Another way to know the trend's probably over. You can, and again, like we talked about, the supply and demand zones keep forming these rectangles, and the market just moves sideways inside the little tiny range. Or the market could even reverse and form the opposite of higher highs and market and lower lows. All right. So that's gonna be able to identify that. But let me introduce you to another in one of our premier indicators. This is the BuySide Global Order Flow Zones indicator that helps you with this. This is an amazing indicator. It shows you who's winning the battle between the bears and the bulls. Okay, so blue lets you know that the bulls are winning. Okay, bulls are the buyers are coming in here and winning. Oh, by the way, these boxes don't actually form. You don't get these colored. I put that in there to highlight those. So this will let you know, hey, I'm in a upward trend. The buyers are in control. The bears are coming in here. Sorry, bulls are coming in here and pushing up. And then when you see yellow, it's a caution. Lets you know statistically speaking, the bears and the bulls are really tied. Now you can see big movement on candles, but that doesn't mean that they're someone's winning more than the other. What it means is that statistically the bears and bulls are tied. Okay, so that's good information to have, because if you're in a trade, you're starting to see yellow. It's like a traffic light, lets you know, hey, something's about to change. Of course, red, you get the downtrends, and then again, it helps you stay in these trades much longer. Okay, one more slide on that, just quickly to show you this. You get this long signal here. This is hey, it's a buyer's market. The buyers are control. Pull the trigger. These lines here let you know, hey, is a good place to put your stop. And then the trend continues moving up. Now, it doesn't always move this way, of course. Get a yellow warning candle, but because it hasn't turned red, you have to be able to stay in those trades longer. And that just continues to push up. Then you get a short signal, or you can't say in this trade, I blocked it with this thought bubble here, but you get a red candle, the trend's probably over. So you jump in, go short, and continue to push that down. You stay in that trend. You get these yellows, but if there's not a blue, it gives you the temerity to stay in a little bit longer for that. Okay, and that's triangle is a nice to be able to see, hey, it's a good idea. Heads up, what's happening right there. Get in there. Okay, so those are two amazing indicators. Now, there's another indicator out there that I would love to talk about. Is the BuySide Global Trailing Stop. We don't have time to show that, but that's another powerful indicator I want to be able to show you as well. So we've gone through a couple different information that I wanted to go through. We went through that offer we offered you, that the ebook and the indicator for 1 month, talked about trends. So hopefully you've gotten an idea of how to trade better using trends, how to decide what the trend is. And then you're aware now of a couple of indicators here at BuySide Global that would help you immensely with these trend indications, help you follow these trends. So what I want to do is introduce you to an option for you. Let me just run this by you for just a minute. So we got the BuySide Global Supply and Demand Trading Bot. Okay, this is 100% automated trading. It does everything that we've talked about as far as doing knowing these zones, knowing when the trend is, knowing when the trend's over, knowing when to exit trades, enter trades. 100% automated trading. Sorry. Okay. So if you were to pull the trigger on the BuySide Global Supply Demand Trading Bot right now, or earlier this morning, yesterday, you pay $2,400 for it. Okay. If you were to get any of these indicators, they're selling for close to $500. All right. So to get this BuySide Global Supply Demand Trading Bot, that's a pretty penny. All right. And that's a great value, but obviously there's a special offer for folks that sat through this today. Okay. Again, I couldn't cover all three of these that we wanted to trade. We wanted to get you some information to make sure you had availability to our that ebook. But there's more ways to trade. We only covered that one. So we haven't talked about breakout from choppiness, scalping during choppiness. When you pull a trigger on the purchase today, you'll be getting the detailed course instructions upon purchase of the product on all those other ways to trade as well. So we also have, again, we have this trading bot that automates all the strategies that we've talked about. All right. So this is another picture, another screen I want you to take a picture of or write down this information. We have both a monthly and a yearly subscription. All right. Please understand that this discount offer is going to be pulled at the end of market, the close of trading tomorrow. This will be pulled out. We'll go back to regular price. So again, what you got to do, this isn't on a regular website, the BuySideGlobal.com site. You go to BuySideGlobal.com/bot. You're going to type in a code. It's going to give you a discount for all this information. Now we got two different plans. You can do a monthly plan, okay, which you're getting 20% off today. It's $476. That pays for your first month. And then it's $195 each month after that. All right. You could pull the trigger on an annual plan. We're still gonna give you 20% off. It's only $1,900 the first year and $1,300 per year for renewal on that. Okay. Again, let's run through the numbers so you can kind of compare and contrast. The trading bot, okay, $2,400 annual value. The supply demand indicator, $495. The order flow indicator, $495. The trailing stop indicator, $495. Great value in all of those, but we want to give you the discount for this. Now, you're gonna want to know, hey, what if I pull the trigger and gosh, I just don't like it? We have a satisfaction guarantee. Okay, we have a 30-day exchange guarantee. We want you happy. Okay, so let's say you get an indicator and it's not working right, or you didn't set it up, you're not having success with it. First thing we'll do is we'll try and get on the phone with you and figure out what's going wrong. You and I need to talk. We'll maybe find out different settings. Oh, it works better with this this setting on this market. Okay, that's great. Or oh, I need to do this. We'll make sure you're happy. If you don't like it, if after we can't make it happy, we'll switch it with a different indicator. Okay, we'll make sure that you're happy as you go away from this. We don't want you to have a long-term time commitment. You can cancel those reoccurring payments anytime before your next payment date. Please understand, we want to give you phenomenal trading tools so that your trading journey is much smoother. We never miss a big move, okay? We always end up missing those big moves. Now, let me put up here again, most of the information you're going to need is on this screen here. Please let me emphasize again, the front office boys are only allow us to run this until tomorrow, okay? Because they know if it was up to me, I would, heck, I'd give this to all family and friend discount forever, but they want this only available till tomorrow. BuySideGlobal.com/bot. You got to type in Ninja20 to get the 20% discount to take advantage of that. Don't forget that other site I gave you to pick up that free indicator and the ebook, okay, the training course on that. So that is pretty much everything I had to say. I'm trying to look through. Looks like we've gotten our questions, most of our questions answered. See if I have anything else. Somebody asked me, is it true we don't know whether orders are sell or buy? That's not true. I say this off the bat, they could be spoofed orders. That's something that happens. I could put on there, I'm ordering 40,000 buy orders at a certain price, as long as the price hasn't gotten there yet. And I think they frown on doing that, but that's potential. But you do know whether it's buy or sell. Yeah, absolutely. That information is revealed to it. So we know what's actually executed there. I'm not seeing any other questions. It looks like they haven't been answered. Time frames you're working on. That's a great question. The only person I'm authorized to answer what time frames these are working on is myself, and I look at multiple time frames and on the screen. But typically, my biggest time frame I typically use is between 1 and 3 minutes time frame, and that's where I find these indicators work really well at. But again, I'm not a big term, long-term investor. I'm a day trader. So that works great for me. But if you're working on different time frames, we have ideas from folks who've used our products, what they can use to help them make decisions better. Let's see. Well, any other questions I'm not getting to? Do you tick or range charts? The answer is yes. I have tick and range charts on my you always there's that screen you have with a bunch of different charts on it. I have tick and range on both those screens, and I have another screen I take you off of, and that's typically on a 1 minute time frame. And yeah, and someone's asking about an older indicator. Blue chip indicator is amazing. We really like that blue chip indicator, and it's still a hardcore, hard working indicator. We do that, but we wanted to give some love to some of the other indicators on there. So, well, that's about all I had. I think we've got through most of the questions. I don't see anything else. Did you get the trading the bot on the monthly plan as well? Yep. You get that bot for the monthly plan. The bot has been working amazing, and we'll help you get that set up. And obviously, we would give you a recommendation. You want to paper trade that for a while until it settles in. There's as many ways to trade as there are traders. And so for me to just I can give you my recommendation, but it depends on how you're trading and what markets you are, is what you want to set that bot up. So yeah, it's a great indicator. So I think that's everything I had to say. Chris, what are your thoughts? I might have caught him off guard a bit. We thought about going 45 minutes, but I think we're going to wrap up a little earlier today.
Your call, Dave. We get in now or go on for a few more minutes.
Yeah,
Either way.
I think let me just answer it, see if I can work. I've got a couple more questions coming in, and let me turn the time over if anybody's got some questions you want to answer. So the free indicator is the price, is the chart pattern indicator that comes in. So in other words, you've heard of them: cup and handle, head and shoulders. There's a rising wedges, bull flags, bear flag. It instead of you having to look for those, it actually identifies those. That's something that you can turn that over to a computer and shows you what those are. So that's the free indicator that's up there. So it's the chart pattern, and auto detection indicator. So yeah, we appreciate you guys being here. Thank you for sitting through this. I enjoyed visiting with you guys. I would have loved to have a one-to-one conversation with each of you. So if you want to visit, shoot me an email, info@buysideglobal.com. That doesn't come directly to me usually, but if you say, hey, I just want to get a hold of Dave, can you send him this email, and we'll be happy to visit with you about trading or anything in trading related. It'll save my family from having to hear my trading talk 24/7. So, and yeah, Renko bars work great as well. Yeah, I've got traders that use Renko bar all the time. So yeah, that's about all I had. I don't see any other questions. I'm going to turn it back over to you. And again, thanks Chris for being here with us with NinjaTrader. Great platform.
Thanks again, Dave, for taking the time to share with us today. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information in this was that of BuySide Global and not of NinjaTrader. All information was for educational purpose and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.